Good morning, everybody. This is Todd with the daily Forex video. Hopefully, you're having a great day today and the market is treating you well. We had a little bit of interesting movements that we've seen over the last little bit. The market is certainly increasing its volatility and choppiness here. You can see this is a 5-minute chart of the Euro US dollar, and you can notice that we're trading along here pretty quietly. It looked like it was going to move up, and then started to pop up here, and without too much longer here, you can see what happened. We had a horrific movement to the downside. And whenever we see these big movements to the downside, we need to realize that there was some type of news that came out or something was discussed that caused a lot of concern. In this case, we had a drop in the market of about 70 pips in a matter of real short time. Now we can see that we had similar drop here in the Aussie dollar, and it's continuing to drop. The pound continuing to drop. So a lot of nervous people out there in regards to what is happening right now. There is talk about some Euro issues again, and that's why we're seeing this start to run down. You can certainly look at the markets and the news to see what's happening with that. So what do we do when it moves like that? Well, the easiest thing to do is just stay out. Wait until things settle down a little bit before we decide to jump back in. Here's the US Japanese yen. Not quite the movement. US Swiss franc and US CAD. So remember that sometimes, even though this was not a planned or a forecasted news event, that the markets, when people start to talk about things that are hot points, in this case, what's going on in Europe, it can really cause a quick reaction to the market. So we need to be very cautious and careful with our trading. And we always go back to the fact that we have to recognize that money management is the most critical thing for us to be able to take it into consideration in holding on to the funds that we have. Now, as a general rule of thumb, and we talk about this quite often in our money management rules, but our maximum single trade risk should be 2%. Now, as we look at that, the key thing here, the key word, the only word that we want to really focus on is the maximum. This means that this is the most that we would take in any single given trade. The most. We wouldn't take any more than that. But it doesn't say we couldn't take less than that. So if we wanted to take 1% or 0.5%, we certainly could do that in our trading. And in fact, it would be suggested that the newer we are at trading, the less confident we are in our trades, the more we should reduce that down. So keep that in mind as you determine your position sizes. Now, another thing that's going on is the Jackson Hole, Wyoming summit, that the financial summit, where there's a lot of people there that are potentially going to be saying things that can move the market. So we need to remember that and take into consideration that we may want to have smaller position sizes. Now, remember, as we talk about the simple trading method, we're looking at trend, support, resistance, moving above the HH3 or the LL3 for our entries, but also that money management is critical for us to be successful with our trades. So keep that in mind, and as you go through and look at this, you may want to wait until things settle down a little bit and slow that movement that we're seeing right now. But a pretty big down pressure, strength in the dollar right now on the comments that we've seen come out. So we'll wrap it up with that for today. And if you have questions, feel free to let me know. If not, we'll be back tomorrow to take a look at the markets and see what's going on. So until then, have a great day, and we'll talk to you soon.